So thank you for coming, Derek, and being willing to speak today.
Thanks for having me. Apologies
Okay.
in advance. I've got a newborn who's 10 weeks old, we call this time of the day happy hour. She's crying right now, so I apologize for the noise of the children in the background. I have four. So.
Well, that's okay. Someone just have to let you know what's causing them, but I'm sure you'll eventually work it out. Okay, well, without further ado, I'm just going to introduce Derek. Now, Derek is my mischievous friend who got me into trouble as a kid because he would come up with naughty ideas and then leave me and my cousin to implement them when we were out at youth camps. But Derek and I have really been, just instantly clicked and been friends pretty much since childhood. And even though we'd go through years without seeing each other whenever we would, it was like no time had elapsed. And Derek ended up working with myself at one of my businesses, old ones, back in 2007. He became excellent at what he did. And as part of that journey with me, Derek actually learned how to trade. And because I introduced him to many of my contacts. And unlike me, Derek was a natural at it, became very good at it, was passionate, whereas I wasn't quite so good about it because my impatience would cost me. Now, Derek being a very stable guy and being a very, reason that I'm doing these courses, Derek's been helping students and friends and clients of ours for years. And he's the only one I trust in this space, simply because Derek's ethical and his students get results because Derek's strict on the numbers. He doesn't take too many at a time when he teaches people. And he really just basically right now is one of the greatest allies. If you've got any kind of inclination towards trading, and when I say trade, not sitting down like hours a day, but just like 10, 15 minutes or ways to generate an income and do it in a way where you're that way inclined, Derek's your greatest ally. He's just so good at it. I've got clients who are constantly raving and thanking him just because he teaches how to do it safely. He keeps the numbers small, gives the foundation, but then also makes sure that everyone knows and as a support. So that's why I've asked him to come and speak, just to come and speak and teach as a bit of a prelude to our Sovereign Income event happening on the 20th of November, which at the end, the team will definitely be giving you the link to that Sovereign Income event, which is where we're going to be showing how to make income streams at this time. And as you can imagine, with governments mandating needle experiments and various other things, and making the flu virus the world's central hub, it's no better time than to make sure that you're in a position to make your own choice, what you do with your life, what you do with your body, and what you do around your income. So you can choose all that stuff. And the event will be covering everything from cryptos to business to like income from cryptos, income from business, income from unusual sources like Stephen, but Derek particularly here with income from trading. So I asked Derek just to come and really speak, share what he does, teach you about trading, give you an introduction, and then from there, just share a little bit more about the fact he'll be speaking on that day and whatever else in his different programs. So without further ado, Derek, I'm very honoured to have you here, and thank you for agreeing to speak for us and being part of this journey to empower people in their income.
Glad you could make it, Warren, after a big day. Thank you so much for having me. Guys, I'm super excited about tonight. Just can I get an indication, how many of you have actually heard me speak before? If you want to just pop it in the chat, it just gives me a bit of a background as to, if you have heard me, great. If you haven't, great. No, awesome, no, awesome, good. So most, I'm getting no's, lots of no's. Great. Well, hello. How are you doing? Christine, nice to see you. You've heard me before. Great. Excellent. Fantastic. No, hello. Nice to have you. Excellent. All right. Thanks, guys, for that feedback. Yeah, an old webinar as a member. Okay, so you saw me on a recording. Thanks, Nadine. Excellent. Thanks so much for the feedback, guys. What I'm going to do tonight is a little bit different to probably what you're expecting. I'm going to do a case study, and I hope you can see my screen. I'm just trying to share that now. Can you see that? Excellent. It's called "What Happened to the Chips." So I'm doing this one tonight. What I want to do tonight is I'm going to spend more time on what's happening in the world as far as the economy is concerned, and what's going on in the world. So you've got a bit of a broad view as to what's going on behind the scenes. What has actually happened is COVID has, of course, taken all the headlines, and it's been a bit of a smokescreen to some of the other issues that have been going on around the world. And so what I'm going to do from an economic perspective is dive into this and I'll show you how it's going to relate to trading. And then I'll, at the end, just talk a little bit about what I do and why I do it and that sort of stuff. So what I would like to do, if guys, this is for information or educational services only, okay? It doesn't constitute and should not be relied upon as financial product advice. None of the information provided takes into account your personal objectives, financial situation or needs. You must make your own decision on how to proceed. And if you want financial product advice that takes account of your particular objectives, financial situation or needs, please, 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 please seek financial advice from an Australian financial services licensee before making a financial decision. So just some housekeeping. Please get rid of all the distractions, mobile, social media. Let's put it on silent, focus. If you like taking notes, you can take some handwritten notes. Questions in the text chat, I'm happy to do that. And if you want to take the mic, take a mic. And the guys get these recordings turned around about 24 hours or so. This is my business partner, Shaquille Latimer. Some of you perhaps have heard him before, but those of you who haven't heard me probably haven't met Shaquille. Shaquille and I have been working together for probably about, getting on about 3 years now. And what we do is basically we trade money for wealthy people. Okay, so we trade other people's money, which is one of the secrets of the wealthy, is to basically use other people's money. And it's a win-win for them, it's a win-win for us. One of the things we do is if we don't make profit, we don't get paid. And it's very much, we just do it for friends and family and that sort of stuff. It's private deals that we do, but it's a win-win for them, because if we make losses, we don't get paid. If we do make profits, they make wins. So it really gives us an incentive to perform. And Shaquille and I are best mates. We come from the opposite sides of the world. We basically, in the sense that we should never have been friends, we often joke, totally different. Shaq is larger than life. I'm far more conservative. He's more progressive. But it's a great balance, because he basically gets me to think bigger and always stretching my thinking on thinking bigger. He says to me that the benefit for me is I actually keep him pretty centered and stabilized. And it's a great combination that works for us and works for our friends and family who do this. One of the things I teach students is this, that there are 3 factors that affect the stock market. And when I discovered this was a game changer for me, because I had always, when I dabbled in the stock market back in the day when I was starting and gave my donations to the market like most people do, I would sometimes wonder, I'd put a trade on and wonder why on earth it would do the complete opposite of what I expected. You meet the CEO, you look at the study the stock, what's it into, what it does, its fundamentals, as we call it in the industry. And why would it do the complete opposite sometimes? There was just no logical reason for the way it performed. And what I discovered is these 3 factors that affect the stock market. And I didn't discover this till years later. So hopefully I can save you a little bit of time today just downloading this to you. And that's the whole reason why I do these courses, is if I can save people the 7 to 8 years of that I had to go through trying to figure it out and work it out. That's the hardest thing I've discovered about trading, is developing a system to trade by. There's so much information out there on the internet now, and people recommend this and that, and pulling all that information together into a system that works is really, really difficult. And that was the thing that I found the most challenging when doing so. So there are 3 factors that affect the stock market. They are politics, the economy, and interest rates. And so what I'm going to do tonight is I want you to remember those 3 frameworks as I show you a case study of what's actually going on in the economies in the global markets right now, particularly this particular case study, which I call What About the Chips? Okay, politics, economy, and interest rates. You're going to see how politics and economy really play into it, and less so interest rates. We really haven't felt the full effect of that just now. And remind me at the end to talk a little bit about interest rates, if you would. What about the chips? I'm not talking about those. For those of you in healthy eating, I am more referring to these babies, the old microchips that basically make the world spin round. We have become so dependent on these in the modern era. The fact that you're watching me on a device that we can actually do this webinar is thanks to the results of a microchip. And they're getting far more powerful in terms of what they can process as technology continues to improve. Thanks to the COVID pandemic, the world is facing a shortage of these microchips. The demand for electronics and streaming services went across the globe with the lockdowns while production plants shut down. We saw in the markets the NASDAQ, which is the indice that regulates, well, basically measures the big tech companies, your Apples, your Facebooks, your Teslas. These kind of companies all end up in that indice. And basically, what we'll look at is how those three were related. What I'll do, Aidan, is I'll get to that question later because that's quite a complex question. Let's deal with that one a little bit later. What I'll do is we'll do a Q&A afterwards, if you like, guys. We can go from there just to keep it simple. What I'll do, so these electronics, basically people are bored at home, streaming stuff around, and basically the demand and online ordering just went through the roof. We saw that indice go up. We saw the NASDAQ really outperform things like the S&P 500, which is a group of 500 shares, the top 500 companies in the United States. The Dow Jones, those are the three major indices, was the one that is a group of 30 stocks. These are the ones you hear recorded or talked about in the media the most. And as I mentioned, microchips are now in everything, okay? So from your coffee makers to smartphones to air conditioning units, merchant facilities when you go and buy something, your bank cards, their laptops, cameras, drones, toys, even your electric toothbrush. I mean, think about how many chips you've engaged with or semi-conductor processors you've engaged with in just getting up in the morning, right? So you get up in the morning. How many of you make a cup of coffee first thing in the morning? Yeah, get a coffee. Sometimes that coffee maker got a chip in it. How many use a microwave in the morning? Any of these devices that I mentioned? Yeah, instant. Yeah. Nope, Aidan doesn't. Okay, fair enough. What if how many of you turn on a radio or some sort of media device when you get up? Yeah, radio. How many of you, the first thing you do is reach for this thing, your phone? How many of you actually reach for the phone, check your text messages, check your emails? Yep, that's probably the biggest one that people reach for first thing in the morning. Yeah, and they're all microchips, right? Microchips and those things. You get in the car, you turn it on, microchips. You go through and order a drink or order lunch through some, you go down the store. You're engaging when you pay for it with microchips and merchant facilities. It's everywhere, okay? Turn on a printer these days. It's got microchips in it. And there's been a lot of demand, for office equipment and stuff like that too, with the pandemic and lockdown. So yeah, there is a lot of gear that we are relying upon. And there are about 3,000 microchips in today's modern car. To produce one car takes about 3,000 microchips when you're looking at things like airbags, when you're looking at things like power steering, when you're looking at the tech behind what's on the electronic dashboard, if you've got an electronic speedometer on there rather than the analog, those are all generated by microchips. And the more bells and whistles your vehicle has, automatic wipers and stuff like that, the more bells and whistles it has, the more microchips it takes to actually do that. And so that's what's really, really interesting about this stuff. Now, here's where it gets interesting. When the lockdowns happened, many car manufacturers cancelled orders for the chips, believing the demand for cars would drop for a lengthy period. In fact, when the lockdowns hit here in Perth, I was actually looking at various vehicles. And of course, the car dealership rang me up and followed up on me. And I said, look, it would be silly for me to buy a car right now because I don't know how long this lockdown is going to be. None of us knew what we were getting into, how long it would be. And I said, if this thing goes for 6 months, what's the point of buying a car and it's just sitting there depreciating in the driveway, right? Or the garage? What's the point? Car dealer said, yeah, fair point. So things really changed in the automotive industry as soon as lockdowns occurred. And so they were just cancelling all these orders. Now, what happened there was that when they started cancelling them, the chip manufacturers had to pivot and they switched their production focus to making chips for the electronics consumer market. And to do that, they had to refit their factories for a lot of these changes, okay? So, okay, car industry, automotive industry is not going to buy our gear. We're going to have to pivot for those who are going to buy our chips. For the microchip car industry, and this is the interesting thing, what they probably didn't count on is that the car industry provides about 3% of its orders, okay? The microchip industry, when they produce microchips, that's 3% of what they produce goes to the automotive industry. The rest, the primary where the chips go, are into the electronic gear, the industries, the bells and whistles, your computers, and all that sort of stuff. That's where most of their production goes into. So now the car industry is a real mess because they can't finish, they can't provide cars, and the market is going, hey, we want your vehicles. People are tired of lockdown. They weren't able to travel internationally, so they want to go on the big family adventure, and they're ready to buy these vehicles. And suddenly the car industry is going, we can't produce them. In fact, Nissan have indicated they'll produce 500,000 less cars this year. And it's estimated that half the car industry will make a total of 1.5 to 5 million less vehicles this year than it normally would on average, which is huge. It's absolutely huge. When you think about the volume of sales that occurs on those, 5 million vehicles, and they're going to make less than, not produce those kind of inventory. And this is where it's getting really interesting. You've got General Motors and Toyota closing down manufacturing plants. This is huge. Toyota is a huge, huge car maker, as well as GM, of course. But, the Japanese the Australians love the Toyotas. For those of you in Australia, I'm sure people are around the world watching this, but Toyota and Japan, there's a love affair that we have with our four-wheel drives. It's really interesting. They can see this from space. The Speedway in Kentucky is now packed full of thousands of shiny new Fords, which can't be sold because they don't have microchips. So what the company has been doing, Ford's been doing, is still producing the vehicles to the point of sale, except the missing parts are the microchips, and they've just been parking them. So they got all these brand new vehicles, thousands of them, like 20,000 vehicles on this speedway track in in Kentucky, and they can't move them. They're just sitting there because they don't have microchips. They can't finish the job. And what's really interesting too is, if you love Tesla, Tesla has to rewrite its software updates. So Tesla basically, they update the software for the vehicles, and people can basically, Tesla owners can just get the updates and reprogram their cars, because of course with electric vehicles, it's less moving parts to combustion engines. They're so tech driven, these vehicles. They're having to rewrite the software updates to accommodate the chip shortage. So this is a big, big problem for moving people around. And I think we haven't really felt the effect of this yet. It's something that's really out there because it's further than the car industry. Here's the thing, unlike the car manufacturers, Apple was smart. They stockpiled a lot of chips. So it's been producing products, but is now saying there's likely to be a shortage with iPhones, iPads, and their Macs, okay? And this is really, really big. The Xboxes and PlayStations are running out. Many analysts have even gone so far as warning people months ago, like back in August, September, do your Christmas shopping early this year, as you're not going to see the variety out there. It's going to be harder to get products that are going on. To further compound the issue, many chip manufacturers were hit with extreme weather and other events. So firstly, there aren't many plants in the world that make microchips. The reason for that is because it's so expensive to do that for small operators that they're usually knocked out by the big boys who make the chips, because they can do it a lot faster and a lot cheaper. And of course, when you've got companies like automotive industries and Apple, these are big companies. They want these things en masse for low price. And so unless you've got a lot of clout and deep pockets to put in these plants to actually produce the microchips that are needed and do it on the cheap, yeah, it's really hard to do. And there aren't many plants there. It produces 1/3. Japan's Renesas plant, it produces 1/3 of the world's chips for cars. They had a big fire. Okay, so suddenly that knocked out their whole production line. They couldn't produce chips. Then we had the big winter last year in Texas, and shut down some of the few plants that are in the United States. They were affected by that. And then Taiwan had a drought. Why would your drought be an issue? Well, producing chips actually requires a lot of water. So they had huge problems too. So suddenly this is compounding the problem, okay? You've got COVID, you've got lockdowns, you've got orders being cancelled, and now you've got people that the ability to produce these chips has suddenly slowed. Then what you've got in 1990, this is a really interesting part. The United States of America produced 37% of the world's microchips, and now it only produces 12%. They mostly outsource them to Asia. And America has been really caught out by this. A lot of their manufacturing, and we saw this with Trump, saying we want to bring all these jobs back into American shores. And there was a big push for this, realizing that the vulnerability that when you outsource everything overseas, okay, it can be done cheaply, but you lose the ability to actually produce it yourself. And if these supply chains are blocked for whatever reason, whether it be from weather conditions and tsunamis and all this sort of stuff, through to military reasons and that sort of stuff, you are very, very vulnerable as a nation. And so this is something that really, really concerned them. So this is where it gets really, really interesting. 50% of the world's microchips are actually manufactured in, of all places, Taiwan. Hasn't that been in the news of late? Good old Taiwan. Now it starts to make a little more sense when you start to consider that microchips are very, very necessary to power military equipment. I mean, can you imagine how many are on one of these fighter jets to run and produce this when it's all done by heat-seeking missiles and anti-missiles and stuff? And these things are incredibly high-powered machines and require an enormous amount of computing power to actually function and operate. Now it all starts to make sense. Now you can see China's interest in Taiwan and why they want to acquire Taiwan, okay? It's not just for, of course, because they class it as a state that usually belonged to them or used to belong to them. You can see that the US is very interested in defending Taiwan's sovereignty because, of course, they manufacture 50% of the world's microchips. In fact, the BBC recently quoted UK Defence Secretary Ben Wallace, who said China was embarking on one of the biggest military spends in history. It is growing its Navy and Air Force at a huge rate. Obviously, it is enraged in some disputed areas. He said, our partners in those regions want to be able to stand their own ground. Okay, so there are, of course, concerns about the military interest here. Microchips lead to economic and military advantage. That's what we can take away from this. And President Joe Biden rushed through the Senate a bill to put $50 million worth of investment into US-based microchip manufacturing plants, bundling tax credits and incentives into the deal for companies who take them up on the offer. So who's interested? Look at that. Taiwan Semi-Conductor Manufacturing Company and Samsung are looking for locations in the United States to do this. But this is going to take a few years to ramp up production, to build all the infrastructure to actually get them in, manufacture them, and get them out. That's what is taking their attention. So America's gone, whoa, we've been caught out here. And this is causing huge security concerns for the United States, as well as economic concerns. He who controls the chip has a lot of power. In the meantime, we've got Australia, UK and Australia, US, I should say, it should be Australia, signing up to the AUKUS deal, with our Prime Minister getting roasted at the moment at the G20 summit with French President Emmanuel Macron after tearing up the $50 billion deal to build 12 submarines for us. You can understand, I don't know how many of you work in business and run your own business or work in sales. It can get rather annoying when somebody walks away from a sales deal and leaves money on the table. Well, can you imagine $50 billion being walked away from by having those awkward moments? It's kind of like, hey, we were best buddies, and now we're seeing ourselves at the G20 right now and having these awkward conversations. So that's been going on as well. As you would be aware, Australia will build its own submarines now using US technology with nuclear-powered technology. This causes interesting relationships with one of our best buddies, New Zealand, because New Zealand will not allow nuclear-powered technology in its waters. And so it places Australia very interestingly on the map. Of course, China's response to this was a stupid strategic move by Australia. That was their political response. And of course, we know of the trade tensions that have been going on about China moving away from buying Australian dirt, wanting to basically find other sources for it, and all this political trade deals going on, whereas the UK is going, hey, we want to trade We want to do deals because, of course, they've had Brexit of late. And so they're out of the European Union and wanting to form new trading partners. Previously, the US only shared its intelligence of Britain, and in this deal, there's also technological information being shared. So if I pause for a moment, and I'll show and point out this, so far in this story, we've seen the economic impact of course, these events, and of course, the political impact of these events. And this is going to have effects on the stock market, because you look at the technology sector, there are going to be companies that do very, very well out of this, who, of course, manufacture these products. That's what we're expecting. And we're also expecting companies that are reliant on these chips but don't manufacture them. What's going to be the impact on them, and how dependent are they upon being able to produce a product when it comes to these sort of things? So this is stuff we kind of look at when it comes to trading the markets. What's also been interesting is the supply lines in the shipping industry. They have slowed dramatically. One of my clients who imports and exports products is just been going, what is going on with this? He gets orders through, but he cannot supply them and fill them. Has had difficulty doing that. Lockdown slowed productions of goods generally. Shipping companies sent out less ships as a result, which meant imports and exports dropped, and empty shipping containers were not being collected. Now, this is interesting. Why weren't the shipping containers being collected? Well, I'll get to that in a sec, but this meant that less shipping containers were heading back to China, because China was hit first. Because of COVID, it recovered quicker, and due to further restrictions, containers weren't able to accept them from the US when the pandemic hit there. The price of shipping containers has increased significantly. I mean, a few years ago, you could pick up something brand new, a shipping container. I looked into this for about $3,500. Now you're paying $12,000 to $13,000 for them brand new. Somebody's got a question. No worries. You can type it in the chat if you've got a question. Yeah, but this is part of the issue, is that the shipping containers weren't getting there. Now, the way it works is the price of a shipping container has gone up. And what you're seeing is that retailers and shipping lines in and out of ports have slowed because of this. September of this year, last month, 500 million shipping containers were stuck off the coast of Southern California, with all these ships sitting idly at sea. And part of the problem was the ships were double or triple the size they normally see. So, of course, they take a lot longer to offload. And then you need more operators, more hands on deck on the ports. And the trucks, you need the trucks and the warehouses to actually move the stuff. In fact, moving the stuff into warehouses was a huge issue, because you had backlogs and they couldn't get it out quick enough. Ships normally offload and then get their empty containers back on board after the lorries and the trucks offload them. But due to lack of ship handlers at US ports, the ships are having to leave their containers at the port and be diverted to other ports. So, of course, lack in supply, the cost of getting them out went up. So there's been a backlog of goods to actually distribute. Further, it gets even thicker, the thing. There have been numerous power outages in China over the last few months, which has led to factories being restricted to 2 to 3 days a week in manufacturing, and also allotting different times as to when they can actually do stuff. Much as this has been due to the supply and cost of coal, which produces electricity. Okay, it gets really interesting. Beijing decided to go carbon neutral by 2060, but still relies on coal for half of its power. So it's trying to meet these targets, but you know what? It's too reliant on what the old systems are doing things. So as demand for electricity has gone up, so is the price of coal. However, the Chinese government has strictly monitored the price of coal, and power plants costs have gone up, and they're not willing to run at a loss. So the plants have reduced their output of energy, okay? Chinese government says you can't increase the price. The power plants say, well, we don't want to run at a loss, so we're not going to put out so much energy as we normally do. And the industries that have been hit the hardest on this are steel making, aluminum smelting, cement manufacturing, and the fertilizer production industries. They've been hit the hardest because of this, all right? I've had one of my clients saying, this is crazy. The factories that I normally get supplies from, they're only operating 2 or 3 days a week. And even at that, they're on rations as to how much they get. So it's not only affecting manufacturing, but of course for the Chinese, their homes as well. And it's been very interesting. Compound that with, of course, Beijing have the Winter Olympic Games coming up in February. And if they're putting such a climate emphasis on it, well, I'm sure that they would also want blue skies when it comes to their television broadcasts of the Beijing Olympics and putting themselves in a good light, particularly with what's happened of late on the world front. Beijing wants to look good. And what nation doesn't when it comes to the Olympic Games? It's a bit of a marketing showcase for them, for any nation that hosts the Games. And finally, this is the interesting one. The job market in the US is doing some strange things. There are record jobs available and no one wants them, okay? Employers can't get people to fill the jobs. This is really bizarre. The extra employment benefits that the government was handing out, the US government ran out on Labor Day recently in the United States. They have been, a lot of people are just going, you know what, I'm better off staying at home with the benefits than actually going out and working. And in August, a record 4.3 million people quit their jobs, all right? This is huge. And it mostly happened in frontline jobs, your restaurants, your bars, and your retail. Record high wages are being offered and the positions aren't getting filled, which is kind of suggesting that people are going, you know what, it's not about the money anymore. I want quality of life. What's another interesting effect of this is early retirements are taking place with people from the mid-50s and upwards calling it in for a day. That doesn't mean that they won't go back to work, but they're just going, for now, a lot of them are feeling vulnerable with COVID and this sort of stuff and being in that vulnerable age bracket. They're living off their nest eggs and savings. And many also people are caring for sick people who actually have COVID. According to CNBC, 1.8 million were caring for someone with COVID, okay? And particularly in that vulnerable age bracket. Other reasons include people have had time to reassess what they want to actually do with their lives after lockdown. And I assume many of you perhaps are in that same bracket who are watching this today. You're kind of going, I think if one great benefit has come out of COVID and lockdowns is people are going, reassessing, what am I doing with my life? Why am I working so hard? Many people, I think, are, you know, if they have the value of family in their lives and they're wanting to make a better life for their families, they're getting to the point where they're going, you know what, why am I working this hard but never seeing them? And since they've had to work from home, they're going, you know what, some people actually really love the work from home lifestyle. Others don't. Depends on the family dynamic. And there's a mismatch now with what CEOs are expecting the workforce to do in the United States. Many expecting people to return to the office now. Many workers are just saying, we don't want to, we want to keep working from home. And it's interesting, that relationship. So even though they're throwing more money at them in terms of the job advertising, they're just not biting. You have to ask how many jobs will be replaced with automation, because eventually employers are going, we still have to manufacture, we still have to produce products and services. Let's get a robot to do it. And of course, that then compounds the problem. The demand for microchips in the world is expected to increase if that's the case. Apparently, they have invented a burger flipper that can do it for $3 an hour. This burger flipper will turn burgers, which is a lot less than getting a human to do that. And my concern is if they continue this way, those who don't want to return to work may not just find themselves unemployed now, but also in the future, because they will be replaced by automation in some industries. So this opens up numerous business and investment opportunities in some regards. It highlights also that you can't be unproductive. The market will reward you according to the contribution you make it. And I think what is really interesting in all of this is that the government influence in terms of mandates now coming out, particularly we're seeing in Australia, and I assume many of you are being affected by this. This is really interesting in terms of the effect that's going to have on the workforce. What will we see in Australia? There are some analysts saying that in March, we'll see a lot of resignations occur. We'll probably see quite a number of those happen before then, because since that time, since those announcements have happened in the last week and a half to 2 weeks, a lot of people are just saying, I don't have that kind of time anymore. I need to reassess my career options now, because they don't want to receive comply to those mandates. So it's putting a very interesting spin on the labour force moving forward and what's going to be happening. And I think I'm a big believer in this. I always come back to asking, I've always taught along these lines, what is your life purpose? Why were you put on the planet for this time in history, for such a time as this? And that's what I always bring my students back to, is like, there is no point to continue doing a job that you hate. One of the things that I noticed when I was working with Warren mentioned at the beginning of this presentation that I was working with him, and I did a lot of consulting. And one of the things I discovered working in those high-end law accounting financial planning firms, people hated their work. They hated their jobs, and they're exchanging their time for money. A lot of them had forgotten the childhood dreams that they had, and were just exchanging it for time, for money, their time for money, and weren't happy with what they're doing. So I started going on this journey, and I found stats to back me up. Australian Institute of Management in 2016 did a lot of research on this, and they discovered that 4 out of 5 Australians were not happy with their current employment situation and were looking to better themselves with other job opportunities. Now, this is all pre-COVID and lockdowns and all this sort of stuff. And I think if any good has come out of these lockdowns, it's a wake up to going, you know what, you've got to get into purpose. You've got to get into what you really were meant to be doing in life. So to me, trading is a means to an end, okay? The whole reason I got into trading was for this, is that I wanted to be able to spend more time with my kids. I wanted to watch my kids growing up. Now, we have 4 children. We just had our newborn about 10 weeks ago, and I'm loving the amount of time I get to spend around the home with them. That's just one of my values. I'm a family man, a family guy. And that's one of the original reasons. Now, it wasn't a straight line to get there. There were a lot of things that came up. And one of those was I started teaching this to other people as well. And I discovered that, you know, my real forte is I really love education side of things as opposed to consulting. And so that's why I do what I do. At the moment, I've said to Warren privately and other people, I can't do this just to build up a great business. It really is about helping people. And so particularly with the mandates that have come in, I'm getting a number of inquiries from people just wanting to know about these courses and what we do. That's a little bit about me. Coming back to this though, I want to just put this all in context as a trader. There are 3 activities that affect the stock market. You can see the political tensions that are going on over Taiwan. You can see the mandates that are happening as far as productivity of people are concerned. You're seeing the economy, the supply issues and supply chain interruptions, political influence in terms of environmental policies, and the effect of power and energy. You're seeing the economies play out with relation to this. And the last part of this is interest rates. And I'll make this comment. It was very interesting this week with the Melbourne Cup yesterday, because most people remember the Melbourne Cup. But of course, the interest rates, the Reserve Bank of Australia came out and they're holding on record low interest rates. But giving us some indication that that's not going to be forever. And the Federal Reserve is kind of the same way. They're on hold. The bank, of course, for the United States, the Federal Reserve, and they're looking at holding things at record lows as well, but giving some indication this isn't forever. They've got to go up. They've got to go up because inflation will increase because, of course, with microchips being in shortage, it's expected a lot of these goods are going to be cost more to manufacture. We've seen some inflation, of course, in the housing industry. A lot of people, of course, couldn't stand the houses they were in during lockdown. They want more space, they want more land. There's been huge moves, as we've seen in Australia, to regional areas, which has changed the affordability of houses in those regional areas, as well as increased equity for those holding land in those areas. We've seen the average price of Australian homes go up. So all of this has a ripple effect. And interest rates, I believe, will change. They cannot stay at these record low levels. The United States does not want to go into negative interest rates like they have in Europe, where basically if you put $100 into the bank account, at the end of the year, you get $95 back. That's what it is. And this is why Europe and the banking system there is crying out for investments. To basically, for the wealthy particularly, they don't want to put their money in banks. They want it to grow, even conservatively, at 2%, 1% a year is better than losing on it. But the reciprocal effect of interest rates are likely to increase. This is cheap money at the moment, as they call it. The danger is that people borrow more than they should, and of course get caught out later and can't pay it back and make those payments. And that's where the vulnerability I'm noticing is really big. Is that he who borrows is debt to the lender. I'm not anti borrowing completely, but you've got to do it with really wise stewardship and go in with your eyes open and doing that sort of thing. Yeah, the bond market has had a bit of a shake-up in that. You're going to see a lot of the Federal Reserve has been printing money like there's no tomorrow with all the political stimulus and stimulus checks, etc., that have been going on. And yeah, that's going to be interesting, that shake-up. You're seeing a lot of that shake-up going on with the credit card being extended in Australia to new levels of trillions of dollars of debt. The effect of that will be very, very interesting, particularly in the taxation area. I'm not surprised if, of course, they start dabbling with taxes, and superannuation may be a vulnerability in that situation too, where, of course, they might want to change the rules on superannuation because, of course, they've got interest rates to pay on all of this. So all of this is going to be very interesting to happen. As a trader, I look at this and go, you know, I'm not an economist, but I go, there are opportunities, and we look for volatility in the markets. As I mentioned, one of the reasons I got into trading was able to stay at home and watch children grow up. Trading could potentially offer a lifestyle that otherwise could not be achieved. And that's why I love it. So it frees up time once mastered. You know, I've got an enormous amount of time. I work from home. If we want to go on holidays with the kids, because we homeschool them now as well, we can just pack up the car. And as long as we've got an internet connection, we can continue their lessons at a different location and then spend the afternoon enjoying and teaching them in the great outdoors and that sort of stuff. And that's what I love. That's the attraction for me about having trading, online businesses, all this sort of stuff. It gives you that freedom to do that. I realized when I was starting to contemplate trading, one, I was fascinated, as you probably can see, by what I call the butterfly effect. So, you know, one thing happens in the world and it has a ripple effect to all these different things across the globe, as we're seeing now tonight. And that's how I got into it. And I looked at it and said, you only need a computer and an internet connection to start up this kind of business. It's great. I wouldn't have to do any marketing. I don't have a boss. I don't have to deal directly with customers. There's indirect customers with other traders out there and deals going on, but there's no, you know, calling up customers and trying to get a sale. And I discovered I was out of the system somewhat. That was kind of by default. And it would put me on a path of independent sovereignty. I didn't consider that when I first started it. I just really came out of desire to spend more time at home. But I saw those other advantages. And that fifth one is one that in this time and era, I'm so grateful I made those decisions. And I think one of the biggest things for me was not giving up. That was that. If there's any takeaway from all of this, I just refused to give up. I just thought there's got to be a way to work this out. And I'm a big believer in working smarter, not harder. So I look at opportunities and go, how can I do the work once and then repeat it very efficiently at other times? And that's what appeals to me about trading. Once I've got a trading strategy working, it's basically looking at how to refine that, how to make it better, how to repeat it. Because business, as many of you know, as business owners, is simply a repetition of behavior to get a result. And trading is no different. And that's how I teach my students. So I take them through several different steps in terms of trading. There's the mindset. The mindset of a trader is very different from an employee and even a business owner as well. I have to work with a lot of business owners and kind of readjust some of the thinking that they make. I teach about the three different wealth stages. In fact, why don't I talk about that now? The three levels of wealth creation are this, that there's making the money, there's keeping the money, and there's investing the money. And they are three different mindsets, three different skill sets. Like, for example, Warren really taught me really well about keeping the money and all of the asset protection, tax minimization strategies that he does. He is a master at that. And I still, even for my own personal situation, consult with Warren about certain things that come up. Because my view is, you know what, when you've got a specialist that does what they do, you want them on the team. You know what I mean? And stick for the stuff that you really enjoy and love. Secondly, that part of that is you're never objective about your own financial situation. So I have my own advisors that I go to. I remember one time using a financial planner to help my wife and I with our insurances, life insurances and, you know, TP insurances and all that sort of stuff. I was a qualified financial planner at the time. I probably could have done it for ourselves, but my view was this guy's better at it than I am. I'm more focused on trading and stuff like that. And in addition, he pointed out something to me that was just staring me in the face and I just couldn't see it. That's because I was just too close to it. And so it's very important for me to have advisors around me, get a better result from those who are real specialists in the areas and have that team around me. I have a couple of accountants. I have really good lawyers that can represent me. So it's really picking your team in terms of wealth creation, who you want on your side, and then getting the education, knowing what's out there, because it's what you don't know that stops you from going to the next level. And it's really going into that level of uncertainty as well. I found one of the biggest things for me was getting used to being uncertain about things. So an employee, you get that paycheck every fortnight. You know, it's interesting. I'll never forget the analogy Warren was quoting someone and saying it's like that cocaine hit, just getting that paycheck every week. You know it's coming, bang, it's there. When you start stepping into these levels, you don't know sometimes as a business owner when your next paycheck's coming in, when your next sale's coming in. As a trader, the most difficult thing that business partner Shaquille and I do is having to wait for the market to move to be able to then lock in a profit. That's the most difficult thing we do, and in deals we do and stuff like that. It's the waiting period because the mind plays tricks on you. The mind can start getting that, and it's training the mind to think differently about this. And as I said, working smarter, not harder. So I hope you've gotten something out of that tonight. I also discovered, as I mentioned, I really like teaching about trading. And right now I'm attempting to help a lot of people who are affected by mandates and facing losing their jobs if they don't comply to these government things. I've got actually the demand so much, I've had to really rush through a new course I'm starting on Monday night. This Monday coming, I've just got students coming and saying, we want in. And I'm being affected by that. So that's a little bit about the economy. This is what we look for in terms of the markets. So those three things: what affects the stock market? Politics, economy, and interest rates. Those three things are very, very integrated. As you can see, they have a ripple effect all on each other. That's the most current stuff that's happening in those areas. And one of the things I like about trading, people don't think, why is trading dangerous? Well, options were actually created to provide safety. So metaphorically speaking, you can insure shares. When I discovered that changed my whole perspective on the markets. I was like, what? You can insure them? Metaphorically speaking, it's not technically insurance, but you can lock in a price and go, I want over this time period, my shares to be guaranteed at this price. So let's say ABC shares are trading for $20. I can buy an option that will basically, if they fall below $20, and even if the company goes out of business, I will be paid that $20. When I discovered that just changed my whole perspective. I said, I've got to know more. Then there were people who were trading for cash flow and basically every week or every month getting cash flow out of that sort of stuff. And that interested me as well. That was the second layer of interest. And then what I discovered, of course, was leverage. Man, last Friday, I got off a call and I had a very interesting situation. I've got a student who has not closed the trade out, but is sitting on 711% return on investment for 1 week in the markets. Now, they didn't use strictly a stock option. They used another instrument, which is very similar, but it gives them leverage. And basically they were asking me, should I close out now or should stay in this trade? Well, I found out this afternoon they're still in that trade. But 711% ROI. They put about $9 grand down, and that's now worth over $90,000, that position in 1 week. So it's not a bad pay week for them. And they've just been consistently getting those results. I've got other students this afternoon who are just starting out and just putting on little trades here and there, putting in, $200 here, $300 there. And they're actually ahead of where they should be at the course, but they're doing that. And they're getting 15 to 40% return on their investment in a week or so. Now, those aren't typical results. Sometimes at 711, that's more of the exception. But I'm consistently seeing the students get, 15 to 80%, that sort of stuff, for, 6 weeks in the market and all that sort of stuff. What I spend more time with the students is actually looking and studying what happens when it goes wrong. when it happens, when it doesn't go according to plan, because trading is all about risk management, and it's protecting that capital. It's great when those great positions come off, when the big ones happen. We love those. We take those every day, especially when they come easily. But the real art of the trade is when it goes wrong. That's when a trader discovers what kind of mindset they've got, how they can hold up to the markets and hold the positions and defend their capital. That's where the real art of trading is. And we spend more time on that and teaching them. And so I take people through a 5-stage process. We look at the mindset. Then, of course, there's a bit of options theory that we've got to look at, because if you don't know how to play basketball, you're not going to play. If you don't know the rules, you're not going to win at the game. So we talk about options contracts. They are contracts. What's the legal obligations in doing that? And we teach all of that. Then we look at the strategies, and we teach about 7 to 8 of those. I don't believe in developing a one-trick pony, because market conditions change. And we apply, when we get really clever with it, we'll apply numerous strategies to the one thing, to the one play. And that's another level of sophistication for our advanced students that we take them through. And then we look at trading, running trading like a business. And you've heard a bit of that tonight. There's a big difference between getting a stock tip around the water cooler at the old office, or in these days, it seems more to be in terms of a social media platform. There's more to that in terms of running a business. A business has a pattern of behavior to get a result. And for me, it's developing a system to trade by was the biggest challenge I look for. So I show students that process and what it looks like. And if they choose to develop their own process, they can do that. And then finally, we workshop virtual trades. I can't tell my students, I'm not licensed financial planner. I don't teach them, I don't give trade recommendations. I can't tell them what to do or not to do, but we look at various case studies and the responses to traders in those different conditions. And they make their independent decisions, what they do with that information from there. But I do encourage them to virtual trade or paper trade. So they basically set up a simulated account, apply some of the strategies they're learning, and test them against real market, real world conditions. And they learn a lot from there, because it's the application of that theory. It happens kinetically and practically. That's when the aha moments happen. So that's a little bit about what I do, and where we go from there. So are there any questions? Have any questions? Sim says, I'm on the course currently about 3/4 of the way through. It's excellent, so much knowledge and practical support and explanation. It's also enjoyable. Can't recommend highly enough. Thank you so much, Sim. Appreciate that. Yeah, it was great working with you this afternoon. Good to see the virtual trades that you're getting into now you're stepping into that next level. It's awesome. Awesome. Expecting big things. So that's exciting. Anyone else have some questions? Do you trust CPI numbers when trading? Do you rely on fundamentals, TA, or both? What's your typical RR ratio for trades? My approach is a little bit different. Obviously there are some fundamentals that we look at, but they're very broad. For me, it's about a trader needs to pick a strategy, and then the stock will follow. It's not about picking the stock, it's about picking the strategy. Strategy comes first, and then once they've decided on a strategy, they go, okay, what stocks fit into this kind of criteria? And that's kind of what I'm looking for. So for example, when we do volatility trading, I am looking for scary headlines, lots of volume going on, lots of action, things that may disrupt things. I'm looking for that sort of stuff. I want to see that baby move. And I don't care if it goes up or down. I think our students really like this, that we put on a lot of trades where I may think that the market will go up, but if it goes down, I still potentially make profit. And it takes a lot of the guesswork out in terms of technical analysis and whether it's going to go up or down and that sort of stuff. Do a little bit of technicals, but that's something that I find very appealing, because I've done technical trading before, and I can, I'm pretty good at it. I can get 8 out of 10 right, but sometimes there's those 2 that you get wrong that can have a real effect on all the gains that you've made. Do you just trade Australian stocks? Mostly, Tanya, do the US market, but these strategies can be applied to the Australian Stock Exchange. We're looking at options. The options market in Australia is not as big as the United States. but I'm mostly focused on the US because US is the biggest market in the world. It's the biggest options market in the world. And some of the rules around the US market give it a lot more flexibility than, say, the European markets. So yeah, mostly focused on those. Good questions. Is this for absolute beginners? Daniela, it is. I assume my students know nothing. I assume that because, so if I assume they know nothing, I'm less likely to miss something. So yeah, that's what I do. And so we in 6 months and Warren's given me huge compliments in the past, and I thank him for it. I'm from a communication background. I used to work in radio as a radio announcer and that sort of thing. And so I learned to communicate in a very short space of time, concepts very quickly, and I had to learn to do that. And Warren says I have a real ability to be able to take complex topics and make them very, very simple, which is a huge, huge compliment for him. So thank you, Warren. I do that. Can we easily buy stocks then? Do you have a preferred broker or however you buy them? Tanya, yeah, there are a number of brokers that offer these facilities. I sometimes buy US stocks. I sometimes do trades without buying US stocks. Yeah, so yeah, we America and Australia have trade agreements that allow these firms to do it. It's basically finding a firm that there's a number of firms. I do a whole unit on picking online vote brokers versus traditional brokers, etc. And yeah, we do that. We've gotten that people are asking how much is the course and how long, how much is the course, how much time is involved. We do it over a 20-week period. I've really found this to work really well. So what I do is I give my students 2 hours of videos, 2 lessons, 1 hour each to watch during the week. And then we meet as a workshop for 1 hour, 45 minutes to an hour during the week. The beauty of that is that it keeps them accountable. I found that students who are left to their own resolve will tend to not do the work. So it keeps them accountable, but it also helps me monitor if they're actually perceiving the work and actually doing the work and understanding it, most importantly. And answer any questions they have right there and then. And it's that hand-holding approach is how I learned how to do trading. And we've been able to replicate that and get it down to 6 months. I have done it in 3 to 4 months. That's heavy going. I've had students do 4 hours a week with me. That is full on. But I found that this method over 20 weeks works really, really well. We used to do it over 12 months. I find that now a little bit too long. Yeah. How much is the course? How much time involved? In terms of time, as I mentioned, about 3 hours, and it's really what students put into it. So if they do home play, I don't like to call it homework. Yeah, they can basically, it's how much they put into it, they'll get out of that. So it can minimum 3 hours a week is what I would say. 4 is a good handle. And, you know, that's not a lot when you think about it spread over that. The beauty is that people can do these videos in their own time frame. They can do it late at night, early in the morning, during the day, lunch break, whatever works for them. That's what's really great. How much is the course? How much time's involved? We do it for $11,995, but for those who pay it up front, they get a massive discount and they get it for $9,995. If Tanya asks, if when a big crash happens without wanting to be negative, how does that impact trading? Simply more opportunity to buy. Tanya, in March 2020, the market crashed. We made our biggest profits then for the year. So as I mentioned, when we do volatility trading, we call it non-directional. So there are different layers of trading. I call the first dimensional is buy low, sell high. That's what most mum and dads do. The problem with that is when is low and when is high. And the problem is they usually don't have an exit strategy of when to get out. So options by their nature define a time to actually get out of a trade. The second dimension is trying to pick the direction. The market can only move 3 directions, up, down, or sideways. And yeah, most people are trying to figure out how that works, which way it will go. The third dimension is time-based strategies. So they're basically sitting there and they're trying to get dividends from what's going on, or they can use options and get potentially paid weekly or monthly, whatever they choose. The beauty of options on the US market is you can go even not only weekly, but you can even go out to 2 years in many situations. And so looking at all those plays, they try to get income from it. The fourth is what I call non-directional. So basically, I may not know which way the market may go. I put it on. If it goes up, fantastic. If it goes down, fantastic. Either way, I'm happy. If it goes sideways, I've got a number of adjustments to make to actually help that. So big, and when black swan events happen, like COVID-19, like September 11, it was really a weird feeling when everybody's going on about we're scared in March of 2020, and you're sitting there and you've made a ton of money. It's a weird feeling, and you know, people, oh, what do you do? I'll trade the stock market. They go, oh gosh, my neighbor said to me, that must be a really rough week for you. And you're kind of saying you've done really, really well, actually. That's a real sleep at night factor for me. That not sitting there worrying about my trades, I want to be able to sleep really well at night is very, very important to me. So a big crash happens, well, embrace it. We love those kind of scenarios in terms of profit. We love it. Can I pay monthly for the course? Absolutely, absolutely. If I don't have money, yep. When's the next one starting? The next one is starting this Monday, actually. So Monday night, but you need to enroll beforehand because I need to get you the first 2 lessons before rocking up to the workshop. We hit the ground running. We don't waste any time. So yeah, we can do that. Daniela, if you want to talk to me privately, we can do so. Just talk to Warren and he can tee it all up with us, and I can just give me your phone number, or we can jump on a Zoom call and talk further on that if you have any other questions. Great questions, guys. Are there any other questions? Oh, there's some more on this panel here. Okay. Are the courses available in the East? It's all online, Rob. I have students all over Australia. I have Sim, who commented earlier, he's in Ireland. And then he traveled over to Italy a few weeks ago and just jumped on these, rubbing it all in. We can't get out of Australia, and he's rubbing it in there as he's holidaying over there. So yeah, we do that. You can also, yeah, okay. I'm just facilitating this one on Monday because there's so much demand for it with mandates going on and stuff like that. I will be also talking on the 20th of November, and we'll talk more about those courses then as well. But if you want to get on this one, I do have some spots available if you are super keen. But like even before this afternoon, you know, my wife's telling me so-and-so wants to get involved, so-and-so wants to get involved. So yeah. Do I have a website? I do, and it's terribly outdated, Elaine. I haven't marketed on the website for about 2 years, but Warren, do you mind if I put it up there? Obviously, if you come through Warren, please mention Warren. It's blueskyfactory.com.au, and it's blue spelt without an E. So I'll just put it here. But it's terribly out of date. I mostly keep doing this because people ask me to. Guys like Warren are asking me, can you do this? People are approaching me saying, hey, they are realizing that they need to have another plan. They cannot rely on their jobs anymore. So yeah, we're just facilitating that at the moment. Any other questions? Okay, covered that one. Yep, covered that one. And these are great questions, guys. Any others? How will interest rates be affected by meltdown of the Australian bond market? I don't know, Aidan. We'll see. As a trader, I don't really know, and I don't really care, to be frank with you. I'm not an economist, as I said before. I don't care. I look for the volatility and where I think the market will move, and I place the trade accordingly, and then I adjust it according to how the market will go. So that's the beauty of being a trader. I don't care. I'm not an economist. I'm interested in this stuff and what the other markets are doing. Meltdown the Australian bond market, government's going to buy some stuff. They're always making adjustments. I don't really know, to be frank with you. Yeah, we'll see. Wow, okay, yep. Yeah. Their interest rates will definitely go up in Australia at some point. I know that. They have to, because of inflation. Inflation will come and they will want to adjust that, but they will mainly, I think, want to do it because they don't have any buffer at the moment. And when a crisis happens, that's the big key, is that they want to be able to reduce the stimulus or reduce the interest rates to help people and create that economy moving. But if they keep interest rates at all-time crisis lows, they're going to run into problems because they've got nowhere to go into negative territory, and you don't want that happening. They don't want to happen. Yeah. Wing, option trading can be quite boring, contracts monthly. Yes, you're right, Wing. And that's one of the objectives I actually looked at when I got into trading. How do I make this boring? Because I wanted to get the gambling factor out of it. I didn't want to gamble. Yeah, absolutely. Good comment. Boring's good. If you want to gamble, take it to the casino or the races, the Melbourne Cup. That's where you gamble, but don't bring it to the markets. Shaquille, my business partner, is a gambler, right? But he never gambles when it comes to the markets. He leaves it at the casino. He's a very successful gambler. How much capital do I need to trade your strategies? Wow. Adrian and Ali. Okay. Look, I can't give you a recommendation as to how much to trade. I've got one student doing live trades, and he just threw in $1,000 a few weeks ago, and he's increased his account value by 50%. So he's now at 1,500, right? I've got other students who are live trading at 15,000. I've got other students who, are doing other various things, have more capital. The guy who just did the 711% return on investment, he threw down 9 grand on that trade. So everybody's at different stages and levels, et cetera, et cetera. So yeah, I always say this to my students: don't focus on the money, focus on learning the art of the trade. Because I always found that if I can become a good trader, the money follows, right? It's knowing how to do that, to produce that, and then it can be scaled, and it can be scaled, etc. Do you have just one course or a couple, Mark T asked? Mark, I have a couple, but I don't really sell the others anymore. The reason is they don't include volatility trading. When Trump got into power, I realized we had to teach volatility. We weren't up to that time. And some of the online courses don't include those units. But if you're an experienced trader, et cetera, talk to me, et cetera. But I really believe that students need to have the understanding of volatility trading, because that's what they are right now. 10 years ago, they were different markets. You could income-based trading. People did very well at that. But when you have COVID, events like COVID, black swan events coming, you've got to know these other strategies. Aiden likes boring, good, music to my ears. Absolutely, Aiden, absolutely. It's really weird trying to stand up here and say, hey, we sell a boring situation. It's not boring. It's Sims highlighted, it's interesting, but the goal is, the objective is, how can I make trading boring? How can I make it a business process? And the process is the thing that protects us, right? That's the thing that has always protected me and Shaq, is we have a process in place. Good-o. Any other questions? Coming in. Tanya asks, you would be wanting to do multiple trades at a time, wouldn't you? It depends, Tanya. It really depends. It depends on the objective of the trader. It depends on their risk profile. I've had one guy, one of my students, it's interesting. He was doing very well in his virtual trading. And then he was going live with this in terms of volatility trading. Then he went full-time trading. He's gone full-time trading. I've noticed he's gotten a little more conservative in how he does that. So he's gone into multiple strategy plays and looking at that. Then he's gone more aggressive again and doing other trades that are more directional and adjusting those. So why is it key to have multiple strategies? Because the markets change. And sometimes you'll look at a trade and you go, I'm going to take the theory of that trade and apply it to what I'm doing now to defend what I'm doing. And I've done that, and I teach how that applies. That's when you're getting very sophisticated. That's really advanced. But that's the stuff where we take our students. We teach them the real basics, and then we teach them layer by layer, and then go, okay, this is how multiple strategies can combine into one play. And the reason we're doing this is because when this occurs, you can defend it by doing the ABC. And that's where it's heading. So that's why I'm not a big fan of just teaching people one trick. I'm not into one trick ponies. Great questions. Fantastic. What else? Do you do crypto trades? I've dabbled in crypto, Teddy. We don't teach it as part of the course. Having said that, though, I've got a lot of crypto traders doing the course, and they've applied some of the principles that I teach to their crypto trading. I've had people apply a lot of the principles to bizarre stuff. Like, for example, I had one student who was restoring cars. And basically, they were said to me, you know what you've taught on time decay has given me a whole different appreciation for depreciation and what that means. So yeah, people apply it to all different types. Is it suitable for all personality types? What personality type are you, Bernadette? I'm intrigued. All personality types. Personality types is a science in itself. So I've had all different personalities do trading. I think, look, I would say this. If you're looking for thrills, don't do this course, all right? In terms of, okay, it's a fun course. We make it interesting. But what I mean by that is if you want to gamble, go get your thrills from, if your thing is skydiving, go do skydiving, all right? You know, if that's your thing, get all the proper training for that. Scuba diving, whatever, but don't bring the thrill-seeking adventure spirit into your trades. That's what I say, because when you start taking on risks, that's a problem. Yeah. When will the next course be after the upcoming one? Rob, I don't have a definite on that. Probably, I would like to get one going in December, because in December, I find a lot of students have spare time on their hands with Christmas break, and they can get a lot of this study done. I like to take advantage of that. If they don't want to, they can spend on their families. That's great as well. But I do find that a lot of students do that. What's really driving me at the moment, Rob, is these mandates. There's a lot of people wanting that, and I'm just trying to facilitate as many people as I can who really want to get in quickly and learn this in a very quick period of time, give them that opportunity. Safety first. Aiden loves process. I love that, Aiden. He says, I'm a sad sack. I love processes, love systems. Good on you. Thank you, Robin. Very helpful. Principles still work for cryptos, Aiden says. Yeah, they can. They can. The issue with crypto is that options are coming into crypto. It's still very early days, and crypto is very, very volatile, as you'd know. So the cost to get into options on volatile, that's an issue. But I've had a lot of the crypto guys apply stuff that they do to their crypto trading in terms of principles we teach. Victor, what is the percentage that students who study courses become full-time traders and earn income without the need of a job? Good question, Victor. I've got one student who's in that situation now. The majority of the students that have come through have jobs or businesses. I'm getting a lot of business owners at the moment. So they are looking for something that they can do on the side that doesn't involve customers. I've got one, getting back to personality types, the guy who just has done this 711% ROI is sitting on that. He's an introvert, and he finds managing staff exhausting. He says, Derek, thank you for giving me something that is just the computer and me. He absolutely loves it from that point of view. So he's an introvert. So yeah, thank you for jogging my memory on that in terms of personality types. Look, trading for people can be a lonely position when it's just the markets and that. But what we do, marketing yourself and computer, but what we do is we also provide community for our students. So after they've done their courses, we workshop their virtual trades after they've learned all this. And I really believe that that's when they start learning. So we've got a community of traders and virtual traders that our students come into, and they can learn from those more experienced who've gone down the path of starting from nothing and learning and going from there. So that's a really fun thing to do. On average, how long do your students need to learn or practice before your students become profitable in trading? Adrian and Ali, I've got students right now who are half to 3/4 of the way through the course, and they're pulling off successful trades already. They've just jumped the gun and done that. I've got one particular individual doing that who I work with today, who Sim will know who I'm talking about. I've got other students who have done the course, and they'll virtual trade for maybe 12 months. And I won't push them to go live. As I said to you, I can't do that. I'm not licensed to recommend people trade or not trade, but I will recommend they virtual trade. I've got one guy who's a young guy. I think he's about 19, 17, he's somewhere between 17, 18, 19. And he is virtual trading very successfully. Has got it down really well. I think just because of his age, he doesn't have the capital to go in trading just yet. But I will be watching him very closely over the next few years to watch his progress. I think he's going to do some incredible stuff. So it really depends on individual circumstance. One of the things where we've often observed, and just to manage some of your expectations, is that when a trader starts to trade, we've often, see them take this kind of approach, that the money that they're starting off with, they need to treat like Vegas money. They could lose it at the casino, okay? Because all of us traders have made dumb errors in learning in the early stages, whether it be punching in the wrong numbers at night time, fat fingers as we call them, misreading something, all that sort of stuff. We've made those errors. Shaquille will admit he's blown up accounts on a couple of times before when starting out and that sort of stuff. And so we really in the learning stages go, look, it's money for many traders that they can afford to lose, all right? Just to get past that hurdle of doing that. And trading is like learning a trade, okay? So become a plumber, it takes, a few years to learn that trade and then learn on the job. Trading's like that for most people. But what I'm seeing most of our students come out and very few losses, and if they do make losses, they're minimal. They've learned how to protect their capital, which I really enjoy. So I'm consistently getting the 15 to 80% ROIs on that money, not on the account, on the actual particular trades. If they put, for example, if they put down $1,000 and they get, 15% out of that, 80% of that $1,000. Aidan says, the software costs? No software costs. We use third parties in relation to brokers and any fees that the brokers charge. That's dealing with them. But no, I don't get my students dependent on my software and data feeds and all that sort of stuff, which is a terrible business model for me, but I am big on what Warren talks about is sovereignty. So my students go away. And I always find it a little bit sad when they leave because, I become great friends with them, but I know I've done my job. They are free. They know how to research the stuff. They know how to test strategies. They know how to do due diligence and finding stocks that fit those strategies. They know how to develop systems. So yeah, it gives them great independence. Great questions. Let me check the other panel. Oh, there's more that come in. Okay. How long do you spend each day yourself? Tanya, I have an unfair advantage over everyone else. Okay, we trade other people's money. So we get money cheaper. We also work with a team. So we talk to each other, et cetera, as a team. We discuss trading ideas as a team. We can take different shifts as a team. There's been times where our head trader Shaq's been on an aeroplane and has, in the past, and said, can you watch this trade and close it out for me and stuff like that. So we have different roles and separate stuff, and we have unfair advantages because we can get margin access to margin a lot cheaper than the average person can. So it's basically, though, when I was doing it for my own money only and not other people's money, it depended on whether a trade was in trouble or not. So if it was in trouble, I'd spend a different amount of time as opposed to what I call babysitting. If the trades are swimming along nicely, check it, yep, happy with it. I'd probably look at the markets longer than most people necessary because I just like it. So I would look at it for minimum half an hour, an hour, when the market's open. If I was managing a trade, I would go, right, I'm going to bet at this certain time, and I would set a time slot and go, right, I need to make a decision by this time if I'm making an adjustment, or if I'm going to leave it, I'm going to leave it. But whatever happens, I'm making a time. By this time, I'll have made a decision. So that's kind of how when it was for myself, I would do it. But it's different when you operate in a team. Neville asks, is it better to trade at night due to the Northern Hemisphere trading? For those in the Southern Hemisphere or in Australia in particular, yeah, there is that time difference with the US. And a lot of people have day jobs and running businesses during the day, so they like the fact that it's at night time. Some of our East Coast students will do the early morning because the market's still open when they get up, depending on which time zone they're in. So, they might get up at 5 in the morning and check their trades and make an adjustment, put a trade on, or 6, whatever it might be, in terms of daylight saving with America and Australia. So yeah, it depends. These are great questions. Let me check the other form because they keep coming in. Is there a minimum amount you accept to trade on someone else's behalf? Yeah, look, if you're asking, yeah, that's a whole different ballgame. I don't really want to go there tonight, guys. Yeah, I'm not going to answer that question today. We do it for family and friends. Sorry, I know you mentioned, but your average returns 15-80%. This is roughly over a 6-week period on average, Mark. Yeah, typically, Mark, and it's just on that money, on that trade. It's not the whole account, okay? I did have a student in 2020 trade virtually only, and they increased their account size by about 52% in the 12 months. And that was really, they were running a business and they were just checking it in the morning and then go off and do their work during the day. And they did very little, and they only traded one particular stock, and they kept doing that. And they said at first, oh, it's beginner's luck. As they got better and better, they learned what they're doing. And yeah, they increased the entire account by about 52% in 2020. So that was fun to watch.
Need to kick the habit that my mind is breathing in.